JP, I have something I want to run by you today.
Sure.
So I've recently discovered, you're going to laugh at me, but I've recently discovered that some people, their entire business is just starting new funds.
Oh, okay.
Right? Just starting new funds to invest in things and giving people a new vehicle to invest in a thing.
Sounds like a SPAC.
I don't know. But it has occurred to me, I've noticed that they just take their carry, they just take their kickback, and they just start funds for other people to invest in.
Sure. And
I don't want to do that with my career, but I just did my first fund. You helped me with my first fund. We raised it in 2020. It's a physical products brand fund, and it's just occurring to me like, oh, people do this all the time, because I had the big learning curve. Once you're through the learning curve, you realize it's just another business. Now, I bring this up because we're experiencing this downturn in most asset classes right now. And it sure seems to me like this is the time to be buying. The one NFT that I actually believe in is VeeFriends, which is Gary Vee's NFT.
Right.
Like that man will win or die trying.
Yeah.
He will spend the next 40 years, even if the project is a dud, he'll do everything he can to resurrect it. Like that's the one that I'm like, this has a pretty good shot. And the NFT market's down 70, 80%. Seems like the time that I should be rounding up a bunch of people and be like, I'm starting a Web3 fund. Nobody wants to invest in Web3 right now, which is exactly why you should be doing a Web3 fund right now, which means that I'd be buying up rare NFTs. I'd be buying up Bitcoin and Ethereum because it's down 80%. And I absolutely believe in both of these things long-term. I believe in VeeFriends long-term. And so it seems to me like, man, should I just be spinning up a bunch of funds and raising capital to be deploying into these assets? Which sounds like hella fun. If the Cleveland real estate market ever goes through another bust, one of my dreams is to resurrect that city and make it the city, like make it America's next great thing. Like I love Cleveland, Ohio. I love this city.
And you gotta get the baseball team.
Right. I have to buy the Guardians.
You do.
So I
still not used to the name. I'm sorry.
It's all right. It's all right. I'll sway you on it. It's a good name. So I have these ideas, and all of a sudden things are going on sale. And my first reaction was to get scared at all the downside. Now I'm like, should I be raising capital and buying up freaking everything right now? And I want you to tell me if I'm thinking about this appropriately, or if my eyes are bigger than my brain right now.
So I'm going to tell you a story to get to your answer. So I was just asked to do a real estate presentation on this exact topic, Ryan, on where are we at in the economy and what's my advice. And my advice was you should buy, you should sell, or maybe do both.
This is helpful, JP. Thank you.
Glad I can help. Because, it really depends where you're at. And here was my explanation of that. I was obviously being silly, but the truth was I've in this market, as things have turned, I've spent $80 million on new purchases in the last 2 weeks. So I've actually bought about $80 million of new assets. I'm also selling $3 billion. I'm selling about $100 million right now. And there's a reason why I'm doing both. So I'm buying and selling in a market that's going through major transfer right now. And so it's not a simple question. I think you have to always go back to fundamentals. And my fundamentals right now are, if things are slowing down, if things get, because we never know. I always say man makes plans and God laughs. So if you have that premise that no matter what we think it's going to be different, which is probably true, then you got to go back to fundamentals. And my fundamentals right now are long-term, higher quality assets will win. But I'm also giving advice to people that if you're not in the market right now, if you're not in the market, whether it's the stock market, the crypto market, the real estate market, if I were in this moment of time, I would stay out. So if you're in it like me, that I'm actively trading almost $200 million. It's a lot of activity that I'm doing right now, but I'm also have positions that I'm moving around for very specific reasons. And I'm actually changing my positions to higher quality assets that I'm willing to own for 5 to 10 years. Even if I'm wrong and they go down another 10%, 20%, I kind of have my list of things that I'm doing on each asset right now based on not over leveraging, putting in different interest rates to make sure that I can consistently pay the debt service if things get kind of rocky. But ultimately, my fundamental belief is this, like in real estate right now, is which markets in 5 to 10 years from now, if we assuming we go through a rough cycle, when we come out will be the high growth cycles based on job creation, these other things that I'm looking at. And if I'm wrong, and these things, in fact, I'm doing a narrative right now on a new deal that I'm doing in Salt Lake City. I'm actually telling the investors, you may be underwater here. Like, I can't tell you, but you may be underwater, but it's okay if you're underwater as long as you've got big boy pants on. Because if you look at the fundamentals over the next 5 to 10 years, job growth, demographics, you're going to be just fine in my belief. But you got to be willing to do that. So what I would say to you in your NFT idea, which is different, big ups, big downs. I really like the idea of investment theses that go beyond what's going to happen in the next 12 to 24 months. Yeah. That's what I would say to you.
No, I mean, I'm only thinking about assets with a 5-year time horizon.
5 to 10 years
if you tell me what is my confidence interval that Ethereum will be back above 1,000 in 5 years, 90% plus.
I'd say 95.
Yeah. It would be stunning if Ethereum is not at 10,000 sometime in the next 10 years. Right. That would stun me. And so it just seems to me like now would be a really opportune time to strike while everybody else is running for the hills.
There's one more thing if I can say to that. First of all, a good friend who's in the audience right now was saying to me today, the answer could be yes, but watch your allocation. Too many people, it's like all or nothing. So allocate the amount you can afford to lose and that you're willing to gain. And I think if it's a number that's not going to be life altering, that would be a really good idea. So whatever you do, I think communicating to your investor, hey, this is a volatile time, which I know crypto has been trying to do, but human nature is we don't like the volatility. Right. Nobody wants to lose 70% of their investment, but it can happen. So just making sure that that's right. And the other thing in real estate that I see, these are really structured cycles, right? And there's no secret. Every time people think things are different, and they're really not. Like in real estate, there's 4 basic cycles through a cycle that you go through. I can take you through. Maybe I think it might be a separate podcast I do with you. But basically, there's 4 quadrants. There's growth. There's hyper supply. So you start to grow a market. So the economy starts to grow. Supply and demand starts to outstrip. So more people are renting, and when the economy is growing, stores are opening, people are spending more on their rent, people are building. Then you go into hyper supply because all these people want to get in on the action. And they oversupply the market. Then you start to get into a distress market, and distress is after hyper supply, which is kind of where I think we're at now. You go into basic distress where things start to go down, and then you get to the very, very bottom of it, which is like the pit of it. And I can't think of the name now. I'll have to get my book out on what the 4th economy was, but it's basically right after hyper supply. It's like distress or whatever you call it. Most investors actually make most of wealth is created between distress and hyper supply. So the point of the reason I'm telling you this is that, like, it's okay. You could be right now, but it also might be okay if you think that this is the perfect time. You probably have a little more time than you think now.
I see.
Because the wealth is made in that quadrant between growth and despair. Right when Warren Buffett says people think you're in that, irrational fear, despair, that's why when things like the worst, it's probably the best time to buy. And you can't exactly time it. But that quadrant is where wealth is generated. So my point is this, and this is how I look at real estate right now. I don't know. My best guess right now on my presentation is that you're going to see, depending on the asset class in the market in the next 12 months, you're going to see a 5 to 25% value adjustment because it's simple math of interest rate hikes and where they're going to go. So knowing...
And is that across the board, residential... Commercial.
I was being specific with multifamily. I think other things can get hit harder, but that might be okay. In my mind, like I said, I just bought a lot of stuff. Why did I buy it? Because I like the long term. And again, if you're kind of averaging in and averaging out, if you have a portfolio, it's different if you're putting all your money on one thing. But if you have a portfolio and you're averaging in and averaging out, and you really like the asset and you're willing to hold it, even if you're naked and you're wrong about whether it's crypto or real estate. But you haven't over-leveraged it, which is key. You haven't over-leveraged it. You stress tested it. And then you're kind of okay. So if this is the end and it's a quick cycle and we get back to it, I'm going to love what I have. If it goes down another 10, 20, 30%, I won't be happy about it, but I'm mentally prepared for it because I can afford it. I've stress tested. I didn't borrow too much money. I raised a lot of my money in equity. And I've also informed my investors that it's okay. Don't be nervous. Cash can even get disrupted. But I think this is an asset you're going to be pretty happy to own in the next part of the cycle. And you can time these things. Does that make sense?
It makes total sense. And what I was processing really for the first time was how you look at asset quality.
Yeah.
Which is, you know, I own real estate through funds, but I don't own commercial real estate myself. And it's a different asset than owning a business or crypto, which is a different asset class. So hearing you talk about what you would want to own just hit me in a different way of how does that translate over to my life and my investments of, am I happy to own this asset class? Am I proud of this investment? Am I proud of this business? Am I proud of what this company that I've invested in the public markets? Am I proud of this? Am I happy to be a part of this, regardless of what the sticker price is?
And you have conviction. Conviction and proud's a great word, but also you have conviction in the thesis. Like, I happen to love Tesla. I mean, I know it's been traded, but right now it's down. Not saying it's a stock pick, because this isn't a show where we talk about financial advice.
Yeah, we are idiots on the internet.
We're idiots on the internet, but it kind of hits all the check boxes that you're saying.
Well, here's how I'm internalizing it, because my most recent investment is a friend of mine bought the company, or bought a large percentage of the company bodybuilding.com.
Mm-hmm.
Are you familiar with this company?
No.
Okay, so I cut my teeth in the supplement world. That's how I made a good percentage of my wealth.
Yeah.
And building and selling a supplement company. And bodybuilding.com was king of the day.
Nice.
They were king. And they really struggled to battle up against Amazon. And they had a couple other setbacks that were avoidable. Just some things that, decisions they made that didn't work out. And so a friend of mine, a peer of mine, bought the company. He has an amazing track record of turning companies like these around. And I looked at bodybuilding and was like, this is such a slam dunk. The audience size, their brand, the loyalty that the customers have to this, their customer list, their organic SEO traffic. I mean, I was like, I want to do this. Like, I want to buy this deal. And what I'm realizing is I feel that way I feel the way that you feel about some of these new apartment deals that I feel about this investment. If this investment were to go down 20%, I'd be like, this is still such a win.
Right.
So much so that I've offered to come work for the company, right, if they need help, because I just believe in this.
Says a lot.
And it made me, and I'm thinking, like, do I have that amount of conviction when I buy Pepsi stock?
Right.
Do I have that amount of conviction when I buy Square stock? Like, I think Square is going to be I think they'll be $1 trillion company at some point, but I'm really betting on number go up.
Yeah.
So I'm just having like an internal check-in with myself of the projects that I have a lot of conviction for versus the ones that, not so much.
Yeah.
And I think if I were to go in the direction of I'm going to raise a fund and buy a bunch of things, you've got to have that amount of conviction to be able to do something.
You do. I do think though, in markets that are volatile and input right now, let's say we're in that cycle, call it a recession, or I guess we'll call it stagflation. We don't know, but I think in that cycle, that flight to quality is so important. So I would say whatever you're like, it's conviction and knowing the fundamentals. I think right now that's kind of, if you look at Berkshire Hathaway, like obviously you really look at his model. He looks at things in chunks of 20 years where most people can't go beyond 2 years.
Yeah.
And I think there's some wisdom in that. And it's totally okay to take some crazy ass risk on some other ones, as long as you're not over allocating on that crazy ass risk.
So let's go deeper into this, because I said something to someone recently where I was, Warren Buffett did not buy any crypto. He did not buy any.
Yeah.
And Warren's whole thesis is when you have a new asset class or you have a new market opportunity, he doesn't get in at the early stages.
That's my point.
He waits for things to mature, and then he waits for the event for things to melt.
Yeah.
And it has struck me, if you look at Web3 or NFTs, that we've now had the early adopters force some maturity in the marketplace. Like, you know, at least some aspect of which projects are going to be beneficial and which ones are going to be around for a few years and which ones are just gone.
Right.
And everything's on sale right now. That makes me wonder, is this the time?
And my answer is, I sold crypto 4 weeks ago and I bought a bunch of crypto on limit orders this week. I'm a buy, sell, maybe. But again, I'm also averaging in. Like, it goes back to, here's your point, Ryan. It goes back to conviction, right? So I have a conviction for crypto long-term. I have a belief in it. You and I both said it with a 95% degree certainty. We think it's going to be worth more. Flight to quality, I'm sticking to the top at this point. I'm not doing a lot of speculation. And I'm allocating an amount that I'm willing to lose. And I'm also not putting it all. I mean, I did spend quite a bit of money this week. I mean, I did some pretty big limit orders, but I'm ready to do some more. And so now I'm setting some new limit orders to kind of average cost in. Could I be wrong? I could be, but everything I've told you, whether it's real estate, it's just kind of a mindset, flight to quality, duration, allocation, conviction. Like, I think it's thematically across the board. It makes it, not that because none of us know anything. Like, we could be 50% right and 50% wrong about any guess that we're going to do, right? But I think at least when you have that, like, fundamental structures to go with it, there's an ease. There's an ease and a strategy. And also, when it's not over allocated, then you can kind of sleep at night about it too. And I know it's easier to allocate with more money. But again, if you have something like a long shot, like, and I'm not saying with NFT, if you were to ask me, like, would I invest in this NFT fund? The answer is maybe. I'd really look to not just the team that to execute. I'd really look at, like, do I get the product and service?
Now, JP, we started this me talking about how I realized that some people just run funds. And a very interesting thing happened in the news today. And it was announced that the Cleveland Guardians took on a minority owner. I believe his name is David Blitzer or Biltzer. And I'm like, well, who's this guy? Like, how did this guy make his money? Because I want to own the Cleveland Guardians. This is my lifelong dream. So if this guy's coming in as minority owner and he has the option to buy a majority share, and I'm like, wow, oh, this guy's doing what I want to do, right? So I got to find out what this guy's doing. So in 30 years, I'm calling David Blitzer and I'm like, I'm buying your team. I'm your new David.
I'm your new David.
And everything I found, do you know what he does?
Right.
Starts funds.
Yeah.
And you know what he does with the funds? He buys sports teams. He just creates funds to buy sports teams, JP. So this just begs the question, is some people's business just to create funds, raise capital, and buy assets with them? Is this a thing?
It's definitely a thing that definitely works in rising markets, but not necessarily in declining markets.
But even if the story is, hey, I'm going to raise a fund and I'm going to buy sports teams, and I will be the person who decides what sports teams we buy, and we're going to hold them very, very long term. Is that actually the business model?
It is for the fund.
yeah, that's what I'm saying. Like,
I'll tell you what I like better than that, though.
Tell me, what could be better? What could be better than that?
Well, I don't know if I want to say it on air or not, but I can tell you it's better than own the sports team is to own the seats through NFTs. Think about that.
Huh?
It's a real estate play. It's sports meets real estate. Each stadium has to sell so many tickets. Yeah. Right? And they would need they want their stadiums full all the time. What if, I don't want to say too much about this one, but think about it.
Wait, is this a real thing that you can't say much about?
Yeah. It's a real thing I can't tell you too much about.
Okay, so I can postulate and speculate.
But here's the point. You can take that same passion, but I'm always looking at how do you create something more sustainable behind it? Because your sports things, that's a big thesis. The idea of selling tickets through new technologies that becomes almost a real estate play is a lot more interesting the way I would do a sports.
Sure.
That's the way I would do a sports bet over betting on teams and that have much more fluctuation.
Well, I mean, that's a very interesting business idea. I'm mostly right now just curious if there is an entire wealth model where someone says, I'm the steward of capital. You put capital into this vehicle and I'm going to invest it in the thesis that we come up with, which is this is so cool.
It's really cool. But let's see, like some of the wealthiest people, when you see those big boats, the yachts, like the mega yachts, probably the biggest boat I've ever seen in my life. I don't know if it was an oligarch boat, but when I was in Venice this week, I've never seen a boat this large. This boat was like, this guy owned a cruise ship. It was the biggest thing I've ever seen. A lot of these are hedge fund managers, and it is exactly what you're talking about. It's It's the fees and when you put together a $10 billion fund or $20 billion fund, which is what, these large Texas Pacific groups, I mean, like these large funds that there's a reason why they're billionaires.
This is amazing to me. Like this is a whole new world unlocked for me
Yeah.
and here's the big aha that happens in my mind. I grew up in Cleveland, single mom.
You weren't the single mom.
I was not the single mom.
Right.
No, my parents divorced when I was in elementary school. I was on reduced lunch programs, and I became obsessed with figuring out how to make money. Right. And so that has been both a blessing and a curse, realizing how I can make money.
Yeah.
And there are things I want to do, and there are things I want to buy that I have a belief in my brain that I have to be the one to find the money to get the thing. So for example, if I want to buy a lot of Bitcoin or I want to buy a lot of Tesla stock, I need to make more money to buy Tesla stock or Bitcoin. And it's now occurring to me that there is an entire model of just raising the capital and being the steward of that capital to deploy in a very specific thesis. And I'm not suggesting that I just say, I want to buy a bunch of things, so put it in my fund. It's just, I have a thesis about Web3, and we're going to allocate this towards Web3. And it's just a new awareness for me to realize that this is some people's entire business.
Right.
That is what they do.
I think the one piece though, and that's totally valid what you're saying, but when you said the steward of capital, I can't help myself. I'm just a value guy. So anytime you use the word steward to me, I feel like that word actually means to me, I need to come up, and we were just having a conversation about this today, with the best risk-adjusted return possible. In other words, you look at risk and reward, and I feel like it's my job, and may not be my job, maybe it's overdoing it, but if I'm going to play, I want to play like the best pitcher on the Cleveland Guardians. So like, I don't want to just play and be a mediocre player. I want to be a player.
Yeah.
So for me, like when you're talking about that, it's actually, yes, you can make fees on large funds, definitely, and they could even work. In the market that we've had over the last 11 years, a lot of mediocre funds have made investors
Fair
returns
point.
and made tons of money.
Fair point.
So that's all valid. I already have an idea for you. Like if you wanted to buy the Cleveland India Guardians, I would know how I would take it at a completely different angle.
Okay.
I'd buy up neighborhoods. I would buy up neighborhoods around. I'd buy the stadium. Like I would literally it's too much for this podcast, but there's a way I could take a risk-adjusted return and spin it on its head and not go for the easy stuff. I'd go for the hard stuff, the strategic stuff, angles that other people aren't looking at that make this potentially a better risk-adjusted return. That makes sense?
Not at all.
Good.
No,
Perfect.
No, I need you to say it again, slower.
Well, I'll give you a simpler version. Let me just give you a simpler, I don't want to give away anyone's secret sauce. I think here's the point.
I need you to give away all of the secret sauce, JB, if you can come up with a better way to buy the Cleveland Guardians.
People's businesses that I'm protecting. The smartest people who make the most money long term.
Is this a tease now?
It
you
is.
just like you're just like, I know how you can do it, but I can't tell you.
I can't tell you, but I do
I know we're homies, but I just can't tell you, Ryan.
The guys who made them, I'll just tell you one, leave you with this, Ryan. This will give you a hint. Okay. During the gold rush, do you know who made the most money during the gold rush?
The shovel sellers.
Right. So just think about that. So whenever there's an explosion or growth or something that you want, the people making the most money are the ones who own and control the commodities, maybe more than the people digging for the gold.
Mm-hmm. So again, this cycle, it's the Coinbases of the world. Like they're selling the access to buy Bitcoin and Ethereum.
Could be. You could be right. And listen, there's nothing fundamentally right or wrong with what we are saying. I'm just saying, particularly in my style, which you'd call kind of value add investing.
Yep.
My style is to go find the picks and shovels because I'm a scrappy investor. That's not everyone's mindset. And it could even be a deficit because maybe to your point, just raising $5 billion and maybe you put it in, cereals, across the board and cereals go up 4% a year, or maybe over 20 years. That's fantastic.
I do enjoy cereal.
You see, so maybe cereal's your thing.
Blueberry Morning.
I can't help myself.
Is the most
Ryan.
underrated.
I'm a value creator generator, and I love to find ideas that people haven't thought about yet, and they're hard to find, by the way. But it makes
what are the
more
picks
fun.
and shovels in this analogy?
I can't tell you.
Oh my!
I can tell you off air.
Okay,
it's such a great idea.
Picks and shovel.
That it's so like, it's almost like Where's Waldo. For those who remember Where's Waldo, it's like it's right in front of you, right, and you just can't even see it. It's so obvious.
Okay, what?
But I can't do it on air because it's not my idea.
I don't want you to tell me off air. That's not fair.
I know. That they're raising a $20 million round now. When they're finished raising their $20 million round, it's obvious.
I feel like you were like, I know a better way to buy the Cleveland Guardians.
I do.
And I can't tell you what it is.
It's so
but
obvious.
It's about picks and shovels. I'll tell you that.
You got it. That's it. I wish I could tell you more. Again, if it was my idea, I'd give it away on the air, but I'd try to respect other people's ideas.
Well, now I'm just confused and upset, JP.
Take the lesson. You're obsessing over the Guardians. Just take the lesson.
What's the lesson now? Tell me what the lesson is now.
You started out with the episode was basically talking about, this idea of fun. So the answer is yes.
But also the idea of buying when there's blood in the streets right now.
You can absolutely buy when there's blood in the streets. My advice is, here's the takeaways from the episode. A, you don't have to buy it all now. You could buy
Right.
now, and it's okay. Even if you're wrong and it's 20% more in 6 months from now, it's still going to probably be a good allocation because, as you know, the way things generally move, they move up. So your dollar costing in, you don't over allocate. You move towards flight to quality. You go from a short-term to a long-term vision of what you want, and you have conviction and passion for the thesis behind it. And last piece, you have an angle, I believe. You don't have to do this, but you have some angle that differentiates you from your competition. That's going to make you more sustainable long-term. That's my takeaway. And it works for everything. I invest that way, whether it's my own real estate or whether I've actually invested in the middle of this craziness. I've actually done 2 investments this week, and they each follow that thesis, exactly that checklist I just gave you. Each one, including what I bought in real estate and what I've done personally, from crypto to a new venture fund to a new A round, a new angel thing, a new like, they're all following the same thesis. So I'm sorry, I don't mean to be so secretive, but they follow that formula.
And I will echo that by saying that has been my business focus in the last 6 months.
Great.
Which is returning back to, okay, what are we doing over the next 5 years rather than what are we doing for the next 6 months?
Right.
What are we building long term? And I'm actually thankful for the downturn for that reason. I did a class this past week where I was talking about, did anyone experience during the crazy run-ups, you were working on your business and then you looked up at the price of Bitcoin and you got distracted?
Yeah.
Or your head's down working on your business and you looked at the stock market and you went, and everybody is nodding. Yes, because when there's a crazy bull market, you're going, squirrel. Like everything's working. Like
right.
Maybe
you can't lose.
And there's a doubt that, at least for me, that I'm on the right path.
Yeah.
Like I'm doubting I'm on the right path because everybody is winning at so many things and I'm only kind of winning. So by my own assessment, by me comparing myself to the founder of FTX and crypto.com, right? So, but when things are melting, I don't have that distraction anymore.
No.
And now I just get to think about what do I want to build for the next 5 years, which ironically is the exact question to ask if you want to be fabulously wealthy.
Yeah.
It just takes sometimes the downturn for you to become focused enough to be able to focus on exactly that question.
Completely agree. And remember, the money's made during the downturns. This is the time when wealth is created now. So it could be scary. You could get overwhelmed by it. It could be during the headlights, or you could just go out and create massive wealth right now. And this is the beginning of the cycle. This is exciting. It's going to take a bit. It takes a bit to work this stuff out. This is the biggest moment of wealth creation, even though it may not feel like it. Counterintuitive.
Well, on the next episode of Investing on Purpose,
this is so good.
JP reveals the picks and shovels strategy to buy Cleveland sports teams.
Ryan, when you hear about this, the baseball is just going to be the icing on the cake.
The baseball is the picks and shovels. We're selling baseballs. That's the. No. You're right. It was right in front of me, JP.
You're getting closer, but not quite there. Where's Waldo?
All right, my man. Always good to chat.
Always a pleasure.
Thanks for being a voice of reason.
To be continued, of course.